Good morning, everybody. Hope you had a great weekend. It was a fabulous one here in Wichita, fall-like weather all weekend long, low humidity, temperatures in the 70s, and hard to beat that. Not much news out around the globe. All was quiet in Iraq and the Ukraine and Russia. Iraq joined the list of weak yeses or outright no's. Turkey has said no bombing from any air bases in Turkey. That's really amazing, too. They're a NATO ally, and we've built all those bases, but they're openly supporting ISIS in the sale of crude oil. They've said they will not interfere with the sale of ISIS crude oil either. Iraq said that they will not approve any bombing of civilian structures where ISIS might be hiding. And what do all of those groups do? They put women and children in front of fighters. They fight from schools and they fight from hospitals. England and Australia have given a tepid response. Germany's on the sidelines. So supposedly the United States will be flying what missions they can fly out of Iraq right now, and carriers probably in the Mediterranean. So it's a strange situation where I mean it's like being in a room with an alligator and you're hoping you're the last one to get eaten by the alligator, in my opinion. So the United States response from its allies, its traditional allies, and from people that need help in the Middle East was a heck of a lot less than forecast. And I think the United States can only point the finger at themselves for so many broken commitments, so many flip-flops and changes. And, you know, in the end, you reap what you sow. And that's where we find ourselves. So the war news is kind of quiet. Not a heck of a lot going on. No news out of Europe. So the news calendar day is all focused on the United States. We have industrial production called up 0.3%. We have the Empire Manufacturing Index called up 15.9. Capacity utilization at 79.3. So all those numbers would support modest economic growth, which is the Fed's scenario right now. Modest this year, growing to moderate next year. And that's kind of been the Fed's song since 2009. In fact, even on some of the Fed's projections, we're going to be growing at 4% for a couple of years. At least they've knocked the 4% out. The Scottish vote is 50-50 according to polling of the English odds makers. It's a huge gambling industry. Pretty good over there. Put the odds at Scottish secession at 45%. So my guess is that once they figure out who's paying their welfare checks and who's supporting that country and all the close ties they have to England, that they'll probably vote to maintain the status quo. At least they know the animal that they're dealing with. So what does that do for us? Today's big news this week's big news announcements is the FOMC meeting on Wednesday. That tends to hold markets in check. Large players want fundamentals confirmed. They're willing to give up trade location. Their play is directional. Trade location is not nearly as important to them as direction of the market is. So they usually don't do anything until the Fed has spoken. And the focus will be on when will interest rates increase. And right now, some people are saying that the first interest rate increase comes in March of 2015. So they'll be looking for language that hints on interest rate changes. And that can swing the market. Right now, the market is saying that the Fed is going to raise interest rates. It's a really, really, really tough spot for the Fed to be in. And perhaps they're going to take the European central banks position of job owning and rhetorically supporting the market without actually having to do something because of what higher interest rates will do to the deficit. Right now, at the current interest rates, which across the portfolio are 2.5% plus, as opposed to the traditional 5% plus. To go from 2.5% to 5% takes interest charges from 250 billion to 900 billion. A threefold increase, and it would be 25% of the budget. And that's really why the Fed's going to have a very, very difficult time raising interest rates. Looking at this structure, if we've got support in this 24 to 28 area, maybe as low as 20, down here where this low volume number is. If we're going to play this, you've got 29 to 4, so that's 8. If you add 8 to 4, that takes us up to 12. So we had to have pretty good selling 8 to 12. Right now, resistance is at 4, so the first sell is going to be 3 to 7. Very, very aggressive. The news, if as forecast, would be supportive for indexes, not so for financials. But it's not going to change much, in my opinion. And the second sell would be 11 to 15. On the buy side, we've got the last rotate down stopped at 31, and we're at 2.5. So this 26 to 30 area would be buy 1. To get started, we'll make an adjustment after the news, and then be looking at 17 to 21 for buy 2. But the focus will be the industrial production number, and the manufacturing index will probably be lost in the noise of the IP number. So we're going to take a trading range posture this week until the Fed speaks, and we'll come back in and we'll take it from there. Now, on Friday, all the play was in calls. They sold puts, liquidated puts, and they rolled that money into calls. So the protection, because the market has been sold, is being taken on the call side, not the put side. They've had massive put positions, and they're starting to take profits on those and then roll some of that money into the call positions. And again, it's portfolio insurance, it's a hedge. Because the market is sold, they're hedging for upside surprises and lifting some of their short hedge. Okay, looking at this market, the knob spread is basically at 13 plus or minus, depending on the day. It was up a couple of 30 seconds in the overnight. I don't think you can read a lot into that. So sell 1 is 3 to 7, and sell 2 is 11 to 15. On the buy side, we've got a low of 25, 26. So we'll make 23, 27, buy 1. Just going to lean against support. Not a lot of magic there. Buy 2 will be 13 to 17. 3 to 7 for both contracts might be a little aggressive, but that's where resistance is. And if you're an exchange member, their mindset is, well, the high is 5, I'm selling 4s. If I'm wrong, I've had a 2-tick loss. And they don't think a hell of a lot differently than that. This is what is, this is the structure, this is where it is. I'm going to lean against it, and if I'm wrong, I've lost a couple of ticks, and if I'm right, I've caught the edge of the market. And that's not a bad way to look at the market. They don't take it personally. They don't go much past reality. They're not trying to read a lot into the market. What if this? What if that? This is what is, and this is what I'm going to trade. And like I said, it's not a bad philosophy for us to take. Okay, you can see up here this 45 area is pretty good resistance. So we're at 36.90. We rejected prices from 38. So our first sell, I mean, it's just where resistance is. S1 be selling against 40, and S2 will be selling against 45. Have single prints down here at 30. Last rotate down was 32. So we'll make 30 to 32 by 1. And then 25, 27 by 2. I think we are headed down to the 1217, 1220 area, given a little bit of time, a little help from the news. Probably not going to make it today, though. One news headline, probably more so out of the, escalation between Russia and the Ukraine more so than the Middle East. I think the Middle East, and when you come back and look at it, I mean, how maybe we bomb Syria, maybe we don't bomb Syria. If we bomb Syria, it'll take Assad. I mean, if they're going to get rid of ISIS, they need all the help they can get, and Assad has troops on the ground. A couple of moderate Islamic groups that are fighting Assad have said that we've signed agreements with ISIS not to take them on. Obviously, they want to keep their heads. So it's just a mess, and you're not going to get there are so many cross currents and so many such a difference in everybody's national interests that it really is difficult to build a coalition and hold one together. And you do that before you make the announcement. So come out and saying that we got a coalition and talking like it's already in, everybody tell you no, does not add to your credibility. And that's what a lot of the problems this administration faces is because of that. Okay, we've had higher lows, and you can see right up here that resistance is pretty much level. So good selling at 75, which has been our number 2 zone pretty consistently. We spilled from 60. Last rotate up was 48, and we're at 28 right now. So this 35 to 45 area is going to be sell 1. Pretty aggressive. And then 60 to 70 will be sell 2. We like the short side of the market. When we left on Friday, we had basically 50 to 60 is the sell zone, and 75 to 85, and we made it up to 80, so you're able to get off a short in our number 2 level, which is what we always like. And we make 10 to 20, let them take out that overnight high, and that's pretty aggressive. This 29 area for buy 2. So this 29 area to 10 area is probably a reasonable buy. But I just think you have to sell the euro every time you get a shot at selling the euro because of the long-term problems that they have. That's a hell of a trade, getting off at 75 or at 28. Hopefully, like I said, some of you got that trade done. Okay, crude oil. The market is, and again, we talk about secure supply in Iraq. As long as the Sunnis west of Baghdad are cooperating and jointly fighting ISIS in that area, the Iraqi crude oil production is secure. If the Sunnis say, screw it, we're joining ISIS, then the security of the Iraqi supply would come into question. And that's what we just have to key off of. So right now, ISIS has done such a great propaganda war against the West that even those in the Middle East won't join with them because they want to keep their heads. And you just don't walk into places that you've just overrun and start wantonly killing anybody you can get your hands on. Or you shouldn't if you want to lessen the fighting in your rear. So right now we're rejecting prices below 91. So our first buy is 75 to 91 even. And then our second buy is 25 to 50. I do think we're headed below 90 to get stops below 90. Nobody likes that, including our oil men in the United States. When they go look at how much they have to get per barrel to break even, the new crude that comes out of tight formations requires, depending on the formation, anywhere from 45 to 60 bucks a barrel to break even. So $100 a barrel per oil makes those guys happy too. One news announcement in crude and gold can send the market up in an explosive rally. You cannot trade these markets without protective stops. I don't like going home short from the U.S. session. I do like getting short in the London session. It's just a little bit safer play. But Europe seems to be quiet as far as the Ukraine goes. No one's added to their sanctions. The sanctions, actually a couple of items on the sanctions from the EU were tabled as to the timing of the implementation of such. So it's a fluid situation. Okay, a lot of commentaries out there on, Japan's market up or down, why isn't our market up or down, and the rest of it. So we may be in a little negative sentiment period on this contract right here. So we have rejected prices above 85. You can see that right here. These single prints are significant. And right now, we're not really doing much below 70. So we've got this 70 area, plus or minus, is pretty good buy one. And again, it's just leaning on structure. And on the sell side, the last rotate up here stopped in the 79.81 area for sell one. Sell 2, 85 to 87. And on the buy side down here, we'll make it 64 to 66. The news focus, industrial production, plus 0.3. That is the focus. Empire manufacturing will get lost. Empire manufacturing's out first. I forgot about that. This is out at 9:15 EMI. I'll be out at 8:30 Eastern, and that's at 15.9. So that will cause a little news reaction too. Capacity utilization 79.3. No one pays attention to that number. In inflationary times where you have labor wages driving inflation, then they pay attention to capacity utilization, but not until then. So down to industrial production, plus 0.3. Increase in that is modest to moderate growth, so if it comes in like that, it will be supportive for the indexes. So I think we have a pretty fair shot of testing resistance in this 80 to 85 area, and then support is 65 to 70. Okay, take at least 15 minutes to get everything up and posted. I'm going to get busy on that. I will see you as soon as possible. There'll be comments in 18 minutes when the Empire Manufacturing Index number hits the market. With you as soon as I can.